Hello and welcome to the Gold Silver Bullion research report. We've got an exciting lineup today. Really, we're looking at the local and broader economies and what's happening there at the moment. Current state of the currency market, because there's been some interesting formulae over the last couple of months, and really finally what we see in terms of gold and silver moving forwards. When we look at currency supply and what's happening there, Australia again, we go to this chart, has just printed huge quantities of bills, of bonds, similar to the US Treasury bills, massive amounts of money to kickstart and keep this economy, and really that's what's been sort of keeping us moving along. Whether it's sustainable, big question marks around that at the moment. We only have to look at this forward leading indicator for US GDP. The blue line is what we're looking at, sort of like the rabbit in front of the greyhounds as they race around the track. That leading indicator, 90 days, is now pointing south, and that really is showing at this point that the likelihood at present for the US to move into a double dip recession is very high. Up is good, down is very bad, and that's really this stage looking pretty negative at the moment. Should continue to confirm as we've been sort of forecasting throughout the last 18 months. In terms of the credit problem as well, so will the government stop printing money, get some sanity, restore, pay down debt, all the things that really need to happen, detox? No, not at all. And we can't see it really going. The double dip recession, they'll be back to the printing presses and hitting it flat out. You only have to look at the US problems with the residential mortgage resets. They're at our doorstep. They really kick off in early stages in the next couple of months and will continue to ramp up quite substantially. The problem with that is you've got the full scope of the market now. No longer is it just a couple of segments. Your prime borrowers are falling behind as much as your alt-A's and option adjusted. There's a real problem with 300,000 homes being foreclosed on every month. So huge problems over there and not going away. Bank failures continue to happen. I think close to 130 banks have closed the doors over there and really left with this nationalised sort of bank system that's over there at present to stop the bleeding. Really switching over to Europe, we're not seeing any sunshine in that side of the countries either. Sovereign debt is just a massive problem over there. Really, they're sort of at the forefront of this systemic issue globally with these countries carrying these huge debt. There's this amazing enigma that's taking place where countries say, oh look, we don't have as much debt as Japan or the US, and it's okay, but the problem is whether it's like fast food, whether you're eating one type versus the other, it's still bad, and whether you're eating huge quantities or mild quantities, it doesn't make it any good. And this is where this social proof is coming back to say, hey, they're worse than us, so we must be better. No, it doesn't work that way. They're all sort of going down this slippery slide together. Greece, Portugal, Spain. These problems aren't going away, and the interest rates that they're going to have to pay eventually, it's like the subprime. We've got it fixed. Oh no, it's not fixed. Oh, we've got it fixed. Oh, it's not got fixed. These problems really snowball and get bigger and bigger, and so we can't see them really dissipating in the short term at the moment. And even if they do get bailed out with their debt problem, the interest rates that they're going to have to pay will cripple them in the future. Sure, they may get some cheap money now, but the markets, when they eventually come out to re-rate, it's not a pretty picture. And every time Greece tries to sort of fix the problem, the whole country riots and protests. So in terms of the consumers on board with what needs to happen, very much not the case. And it really highlights, particularly with this aging population around the globe, their voting power and what they're going to have in the decades to come. Really, they're only interested in their own interests, and as a voting population and keeping the politicians in power, they're going to do what the voters want, and that may not necessarily be for the best of the country long term. And we're starting to see some of the decision making that's been made up until now with Greece's ageing population and their reliance on the government sector is really being scrutinised, and it doesn't just contain to what they call the pig countries. Iceland, Ireland, within the buckets as well, and we'll start to see some issues really coming around how they're going to manage that collectively with this combined packaged up country. So back here in Australia, we turn our sights and we really look very directly at China and say, are they as strong as they really are? We've really got some huge, massive question marks. Pivot Capital came out with an excellent report. Encourage all the viewers to go and have a look at it. Really breaks through the mystique around what's going on in that country, and really, the main reason they've been able to continue to fuel their economic growth is because of what they've been doing from a GDP perspective, or what they've been doing from an infrastructure perspective, I should say, spending on railways, roads, infrastructure building, and that's contributed to the growth that we've seen. But it's not sustainable long term, and so we'll just have to wait to see what plays out. So what does that mean to gold and silver? Well, I guess two things. Let's flip and have a look at this 60-year cycle on interest rates. A lot of people go, oh, interest going up, down, up, down, up, down. A couple of points here, a couple of points there. It's been tightening recently. It's such a difficult thing to forecast. A lot of people say, well, hey, look, here's 200 years worth of data on interest rates. It's a 60-year cycle. The peak was 30 years ago. The bottom we're coming up to now around 2010 to 2012. Long-term cycle, 60-year cycle, we may see movements at the bottom between 5-10% variance is not uncommon. But really from 2012 onwards, we'll start to see interest rates head back north again. And, gold and silver really are linked to this interest rate cycle. And, you only have to look at the 20-30 year bear markets from the peak of the 70s down to about 2000 when gold finally bottomed and then has started to increase. They really follow this interest rate cycle. So a couple of things the government's going to have to continue to stimulate. There's a lot of public backlash, but that's going to be the first response will be to hit the printing press again, and Australia's going to be no different, and we've seen that by the quantity of dollars that we've been printing in the chart with the government bonds. Similarly, with mortgage stresses and how much pressure people are on, this is lunacy. People are historical lows of all time, interest rates, and yet 14% of our population is in mortgage stress. What's going to happen when we see mortgage rates move back to normal interest rates levels, and then B, when they further tighten as well? And so it's just a case of time. Even if we don't see this credit storm hit, there's going to be a point where the consumers are going to be toast. But I think about 30% of their disposable income at the moment is just going down to paying on debt. That's not a sustainable method. And so long-term outlook, 5, 7, 10, 15 years out for gold and silver is still looking quite positive at present. We'll continue to see it ticking along, as it's been doing over the last decade, and it continues to move along. The big things with these asset classes is, you'll see some movements. It will continue to jostle around, particularly in the credit crunch. We'll see gold really get very skittish. We may see it punch higher, we may see it come back a squidge, but really when we're looking at the long-term trends, which is what we're interested in, this isn't a short-term trading positions for the physical buyers. We've still got a very positive outlook. We recently interviewed Richard Duncan, from the dollar crisis, and he's also released The Corruption of Capital. Richard has a very positive outlook with gold and silver. Expects them to continue to track along the 10-15% per annum growth rates that they've been doing for the last decade. And so, for a quality investment holding, retaining your purchasing power with all this cash that's being printed, and retaining, an asset class that's, for extreme events, it's definitely the place to be. That's all for today. I encourage you, if you haven't been to our website, www.goldsilverbullion.com.au, please visit it. Thank you very much.